Hey, okay. See, we're live now. Let's give it a few minutes. Okay. We're gonna start in a few minutes now. Let me know if you can hear me. Um, yeah, let me know if you can hear me, please. Let me know. Gonna get started now. All right, so like everyone can hear me. It's great. What country are you joining us from, though? There's no. Where are you joining us from? Where are you joining us from? Let us know real quick. Okay, we had a little bit of issue now, but yeah, reading through the comments, you should be able to hear me now. Yeah, we have should be able to hear me now. Okay, just 5 more minutes. Let's make sure everything is working perfectly. Okay, I think I'm back loud and clear, and let's get started now. Yeah, I see everyone from Ghana, Chicago, Uganda, Nigeria. Yeah, it's amazing. It's good to see everyone here. Yeah, Rob, I see you. I see Rob. Okay, so let's get started real quick. Yeah, the purpose of this live um is the market is super uncertain right now, right? There's a lot going on in the world stage and the political state right now. And yeah, I can see how that could trigger a lot of I've been looking at the whole market this week, and I could see a lot of panic in the market. I could see a lot of people literally just been panicking in the market, and I can see how that can drive the market sentiment. Now, that could drive the market sentiment, but does it mean that people are not going to make profit out of the market? I think the anxiety inside the market is really just going to create a gap. Now, this is the time where the guys with the real knowledge and the guys who wants to make the easy money gets to compete in the market. And every time that this happens in the market, the money always goes to the guys, who are ready, right? So this week we're gonna be looking at the trades we took this week, and just talk to you guys about a few things. But before we even get started on that, okay, I want to talk about something really, really very important, okay? I want to talk about something really, really very important. And I'm just gonna share my screen with you right now. I'm gonna be using something from a trade. I always love to bring receipts, right? I always love to bring receipts, right? There was a trade I took sometimes last year. Yeah, right, last year. I want to use that trade as a basis, okay? And by the way, if you're not in the SWINGTRADEFX free community, you should actually find your way in. You can click on the link in the description to just join our free community. Now, this was a trade I posted live with over 1,000 views. Over 1,000 of you guys saw this. I posted these, close to this time last year, and I wanted to use this trade to have, to explain something to you guys, okay? And I decided to use this example because I posted it publicly to, a lot of us, right? And this trade gave us 1:14, right? Because we had it on 2 and 3, and they are both like 1:7 right? And this single trade did about 70% of my account for me as at the time when I posted it. Now, I'm going to look at this trade now, and I'm going to go into the live chart, right? And I want to teach you guys something really very, very important. I think this is the first thing I'm going to teach before we get into, the market, to see what had happened this week. Let me go back to that trade. So I'm going to go back to that trade on the 1 hour or on the 30 minutes, right? I'm going to go back to that particular trade. There's something I want to teach you guys because I got a lot of feedback this week, because one of the things that you guys know I'm really very famous for, in quotes, is the fact that I do not care about the news, okay? I really just do not care about the news. And that didn't come from a place of arrogance. It came from a place of understanding, right? Understanding how the market works, right? I'm trying to scan for that particular trade on the chart right now. It should be somewhere around this point. Since hold up, let me just take it like really faster so that we can all see it. This concept I want to show you guys is just to put a nail on the coffin for the mindset for the mindset most people have with respect to trading the news. Okay, I'm going to show you something really interesting. That same thing that happened right here, but I just wanted to show you guys from the example that I sent out so that you guys can actually see it right here. This is the trade right here. Okay. Can you guys hear me clearly? Please, you can signify, or you can write a quick chat. Let me know. So I want you guys to see this. Okay. I want you guys to see this. This was the trade. This was a particular trade. And I'm just going to give you a very quick breakdown to this trade, right? This trade hit a peak, right? And the market came back right here to test, the slow. And we had, a very good retracement right here. And right at this point right here, we had the market hitting a fib level. These were all fib levels in the market, right? We took the fib levels of the 4 hours time frame. So we had a situation whereby the market was rejecting back to this, specific level. So we had the fib level around this zone. And we had a situation whereby this became our area of interest. And we're looking forward to shorten the market even more. Okay, we're looking forward for the market to even, to short the market even more. And yeah. What was our entry on this trade, right? I want you guys to look at this. I took this trade on my phone, actually. I took this trade on my phone just to show you that this concept is easy, right? I'm building up on something, right? So I want you guys to follow the storyline, right? And we have a situation whereby we had the market kind of break back into, this level. And we had a trade opportunity. We waited for the market to give us a pullback to the upside. For you guys that are on the free channel, you can remember this trade. This trade fell off really, really crazy. And it happened in a matter of minutes, right? This was the trade, if you guys can remember, right? This is right here. I remember that I posted this on my phone because I literally was in transit when I took this trade, right? And this was the trade right here, as you can see. And we really did smash TP live with everyone. Now, what was it about this trade that I want to teach you guys from? There's something about this trade that I want to teach you guys. Something really very important about this trade is there's a lot of questions that I get a lot, and people ask me, and it goes like, what do you think about the news? The NFP is out, the CPI is out, the FOMC is out, the this, that, everyone, I've been programmed to believe that this is just one kind of crazy event in the market that turns the market upside down and just reset the market. Now, here's what I want to tell you guys, right? For everyone watching. The market or the news does not alter the sequence, the structure of the market. Let me repeat myself again. The news does not alter the sequence or structure of the market. You guys that have been with me for long enough knows that my principle and philosophy with respect to news is very simple. The news is a catalyst that speeds up or causes a sharp retracement in the direction of the trend. So what do I mean? When there's the presence of the news in the market, right? What the news does is the news push the market even more rapidly in the direction of the established trend. Okay? It is very important that you know this. Now, look at your screen. Look at this case study I'm using. The case study I'm using was when we took this trade after the market went on to give us a retest. We never knew that there was going to be a news right here. We took the trade based on the fact that the structure that the market had confirmed, right? So this trade, if it would have taken us maybe like 5-6 hours to, or 10 hours or a day to hit a take profit, it took us only 2 hours. That is the effect of the news in the market. I'm not trying to let you know that the news is irrelevant, but I'm trying to tell you that the news is a catalyst in the market. It's not the one that defines the market, the movement of the market. What defines the movement of the market is structure. Structure is king. So to everyone who has still been very confused and asked me and sent me different mails about news, and you are just putting yourself under unnecessary panic. I've never checked the news for over 6 years, right? but I've been making profit and I've been trading, right? The point is you get to a point in your trading career that you want to understand the role of the news, right? So most times when the market moves super swiftly in the market, I get back to, and then people say, oh, this was the news that happened. I really don't know. I really could care less. My goal is for me to know where the structure of the market is. What are the key points of interest in the market, and engage and load in a position. I don't care. The news could push it faster than I think. The news could push it slower than I think. I do not really care, right? So the role of the news in the market is usually it is a catalyst, or perhaps maybe there was a consolidation before the market, before the news came out. The news is going to break those consolidation, but the news is not going to do it in antagonizing the major structure of the market, as opposed to the way most people think about it, right? The news is not going to break the structure antagonizing the major sequence of the market. The news, whatever structure the news is going to break, whatever breakouts, consolidation is going to break out, has to be within the sequence of the direction of structure. So I would say that if you are one of those people that you're always looking at the news and you get super anxious and have all this anxiety because the news is coming out, and that really kind of displays your mindset, I would say that you are better off. And I say this with honest conviction, right? I say this with authority, right? Because I've done it over and over. This is my 60 years of not trading with the news, right? I can tell you as a technical trader, you are better off trading without the news, right? If you are a fundamental trader, I think that will be good for you. I think you need the news. But if you are technical, the idea of technical trading is to record all this events and sequences into specific patterns, right? So that you can be able to analyze the market through the lens of these patterns. So you're already analyzing the patterns, whether you like it or not. Your analysis has actually had the effect of the news incorporated with it, and you can use that to actually project into the future or project into what you think, right? So you have no business actually checking the news every now and then and putting unnecessary pressure and anxiety, right? A lot of you guys are so quick to say, I want to close the trade. I don't want to. No, that is a very basic level. That is an amateur level of seeing the market. Chart structure is king, right? Always make sure whether the news is inside, the news is not inside. Always make sure you are always on the good side of the market by being in the side where the structure is going to. The market or the news is only going to catalyze that move. So a move that is supposed to take one day could take few hours because of the news. But you have to be able to position yourself. And that's why I'm using this trade as a case study, which I had given in the past. We never knew a news was coming out. We just positioned ourselves and locking our entry. In fact, I got text from my students, right, that, the market just smashed TP. It was unbelievable for me because I wasn't expecting that. I'd actually predicted, okay, the market might, take profit during the time where when there's super liquidity in the market, usually the American time and the London time, right? But it happened super fast. And guess what? Even without the news, the market would have eaten my teeth. But the right thing to do is just position yourself in the market at all times. This is very important. So for everyone, my answer to you, for everyone that mailed me this week about news, is just analyze. You're a technical trader, analyze the market based on your technical structures and understanding. Position yourself in the direction of the trend after confirmed structurally, and that is all. Place your stop loss behind every highs and lows, and the market, even if the news kind of give you some sort of retracement, will never eat you out. So it's very important for us to know that. So let's get into this week and what had happened in the market this week. Let's get into what had happened in the market this week. It has been an interesting week because I was very, very clear on the position I'm taking in the market this week. I told everyone I was going to buy. I was going to be on the buy side. And I did exactly just that, okay? And why am I on the buy, right? So I'm just going to carry you guys along and we kind of look at the market and what to expect and what the market might just be doing going forward into the rest of the week. A lot of people panicked out of the market this week. And it's understandable. You know, you panic when you are not certain of what you are doing, right? So what I'm going to do here is to break down the market, break down the reasons why I haven't seen buys. A lot of people are seeing sell in the market, and I wonder where the sell is coming from. You know, and we had a couple times in the market where the market kind of like gave us retracement, and a lot of people panicked out and freaked out, but we still held. In fact, I hadn't new buy positions into the market when that happened, right? My initial entry was even way higher, and I was able to get in on cheaper prices, you know, later on in the week, even when the market was tanking. Right when it was tanking, I got in on the buy. Why? Because we could see beyond just the noise of each candlestick. We could see beyond just the noise of what the market is doing on each candlestick, and we can be able to actually take a very well and informed positions in the market. So first of all, let's look at what the market is doing. So to have a clear understanding of what the market has been doing. So I'm just going to take this off, and I'm going to go back again. And I'm just gonna let's start from the monthly time frame. I think I'm gonna drop a video sometime where I'm gonna be doing a comprehensive, you know, breakdown of the market, right? Why did we get into this market? Why do we say the market is a buy? Can you guys hear me clearly? I just wanted to be sure my gadgets are really working. Can you guys hear me clearly? Let me know if you guys can hear me. So let me know. Let me know. Can you guys hear me clearly? Okay, perfect. Seems like we're on the same page. Okay. So let's break down the market. Perhaps maybe some of you guys can decide to join us this new week. You know, I'm really in a very, very, very serious swing mood. Okay. I just want you guys to know I'm in a serious swing mood. I'm in a set and forget type of situation, right? And I'm loading in positions, right? If you've been with me for a very long time, you know I always have one or two opportunities where the market is given a very long time move, and I always capitalize on it. For people who have been with me, last year December was one of those times where I kept stacking up position, not recklessly, at each level while maintaining the same risk. It takes a lot of skill level to do that, right? A lot of people open different positions in the market and put their account at risk. No, we open different positions in the market at different level, maintaining the same risk, okay? So let's look at the breakdown of this. And before I even break it down, I want to give you guys an advice, right? There's a lot of reasons why a lot of people are not profitable. And I think from my experience, one of the things is lack of clarity, right? Lack of clarity. A lot of people are all over the place. You're trading this today, trading that today, indexes today, gold tomorrow, and, you know, all of this trade. So you are not a master at one thing, you know. The law of intensity and focus says that anything you focus on intensively, right, you become a master at it, because you focus on only that things and you begin to see things that you do not see on a regular day. Okay, so let's analyze this. It's going to be more of a technical class. Okay, so it's very obvious, right? Where is the market going to from a monthly time frame? It's very obvious. You don't need a lot of technical understanding for that. The market is going up. It's been going up since 2019, right? It's very simple and straightforward. The market has been going on since 2019, okay? So from just the monthly time frame, we kind of have an understanding of what the market is doing. So what is the next thing that we want to do? We just do not just take a trend for it and say, oh, the market is in an uptrend, right? No, we want to be able to confirm the integrity of that trend using our knowledge of structures, right? And what are structures? A trend is going to continue to be on in the direction of the trend, maybe for a case study of a bullish trend, if the market is on highs and lows and highs and lows and highs and lows, right? So let's look at this right here. In this case, we're dealing with the bullish trend. What do we have right here? We have the low where the market is starting from, right? and we have the market start to move on a high, low within the structure point. Then we have the high, we have the low, broke the bigger structure, and it continues to give us a high and the low. This was the retest, right? So in this case, these are the different lows at each level, and we have this low right here, we have this high, we have this low right here, and we have this low. This low seems to be the most recent low that the market is actually respecting. Okay, this is the low that the market is actually respecting right now. So what do we do on this case, right? We identify the last low. This is the most important one you want to see right here, right? Why? Because the market is moving on a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. It broke this level, and now the market is rejecting. But there's something really interesting I want you to see, that when the market broke this level, the market has been here retesting this level over and over. Now, what does that mean? That means that this market is still on an uptrend, right? And this was the highest point where the market got to before the market started to consolidate within this range. So this is the range you just want to focus on. You don't need to go back into 1980. You know, I see the way a lot of you guys trade. You think the more you focus on the bigger picture, the more information you get. Yeah, why is true? The more you focus on the bigger picture, the more information you get. But you have to also filter the kind of information that you are getting on all time frames, okay? So we are right now in between the zone, and you can see that the market right here at the previous area of resistance is turning into a support. Is that the only thing we got right here? Most likely, when we bring out the Fibonacci out, we're going to see that that's also a very strong Fibonacci level. So not only do we have that level, we have a very strong Fibonacci level. So from a monthly time frame, this market right here is still very much bullish, right? Now, there was a time that the market actually came to this downward path, but notice that the market could not break below this low, right? And the market went on to close above. And ever since then, we've been having this consolidation right here. And the market has been proving not to come to that low, right? So anyone right here would confirm that structurally and trend-wise, the market is to the upside. So it is very important for us to understand what the market is doing. The market is right to the upside. Simple. So what do? We keep breaking it down systematically. The goal is for us to keep understanding what the market is doing until the market gets to the lower time frame, right? So that being said, let's come to the weekly time frame. What do we have on the weekly time frame? On the weekly time frame, you want to be able to break down what the market is doing within that zone, right? And honestly, all you need to be successful in this trading is to understand market flow, understand the concept of structures, and understand how to tell stories on the chart. Forget about the complicated terms. Forget about this all complicated strategies out there, honestly, right? Or most of the strategies are just recent concept, but you want to go with a concept that stood the test of time. You will never get it wrong telling the story of the market and understanding the market from a very discretional point where you can tell the story of the market, right? So what do we want to do on the weekly time frame? Everything we want to do on the weekly time frame is for us to just be able to break down what is going on within that range. So what is going on within this range is pretty simple, right? We have the market rejecting this high. We have the market forming into a structural point right there. And what happened right here? When the market got to this level, what do we have? We have a situation whereby the market dropped. But then, you know, being curious, you want to know, why did the market drop? This is where you want to look to your left. What happened in the market? Here is the market rejecting this level, right? So you can see this level where the market was rejecting. We have this level right here, which is a very strong level where the market was rejected. So when the market got there, right, the market started to reject. Now, what happened during this rejection? The market broke the structure to the downside. So I want to make it very clear. The market started to move higher highs, higher lows, higher highs, higher lows, broke the structure to the downside, but could not actually close below this level, okay? The market could not actually close below this level. The market starts to reject to the upside. Now, the market broke the structure back to the higher level. So what does this really mean for us? What this means for us is very powerful. It means that the moment the market broke this structure to the higher level, to the higher point, we immediately establish the presence of a low right here. Okay, so that means we have a low right here from a weekly time frame perspective. At the moment the market broke, the market starts to come to this level. So for folks that trade on a weekly time frame, maybe like the hedge funds and the big money managers, they want to take their profit, their trade immediately and keep riding these to the upside, to be very honest. But we are retail trader, we are not going to do that, right? We want to have an understanding of what the market is doing. So apparently, what this market looks like is higher, low, and on the weekly time frame, the market has changed structure and established a new low. And all of these that you see right here are only mere consolidation. These right here are only mere consolidation before the market starts to take off. Okay, and this is simply what the market has done so far. Okay, so the next thing we want to do is you want to come to the daily time frame. Remember, the monthly time frame says that the market is to the upside, right? The weekly time frame says the market is to the upside. What about the daily time frame? Does the daily time frame says the same thing, right? And you want to make sure that you are as accurate as you want to be on the daily time frame, because now you're getting closer to where the market is at, right? So using the same logic, right? The market is right here below this at this low, right? The market could not break below this low, and the market gave us this rejection, this break on the weekly time frame. So let's look at it through the lens of the daily time frame. Okay, so if the market had the higher low right at this point, okay, and all of a sudden the market could not break at this point, we want to confirm the integrity of this low. Does this low now count as a higher low, right? Or does this low just mean that the market is rejecting and the market might come back to it? That's the question that we want to be able to answer. And for us to be able to answer it, we have to look at the market closely. So looking at the market closely, what do we have? While the market was falling down, we have a situation the market was more of a specific structure, and the market kept, retracing. And at this point, we are still very bearish around it, because we had this right here, that if the market does not break this level above this level, then we cannot call that the market is actually retracing. So let me teach you guys a little skill, right? For you to be able to qualify this a higher low, it has to break this level. For you to qualify this a higher low, it has to break above. So a break above these levels, a break above, the last high is what validates these structures as the market is on a higher low, right? If it doesn't break the higher low, what usually would happen? Look at it this way. So if you call this a higher low before time, the market usually might reach here, refuse to break, and continue to move to the downside. So a lot of people get faked out. And I teach this explicitly in my course for people who, after this, want to enroll in my mentorship. You can see the link in the description. I recommend that anyone who's looking to take in their trading serious this year should actually sign in the mentorship, where you're going to be learning these principles, right? And I discussed even way more advanced strategy in that, right? So look at these two things, right? I want you to have an understanding of these two things, right? So for us, this was our, let me just take this off real quick. So for us, this was our, and by the way, it takes less than 2 minutes to analyze the market, okay? I'm doing the explanation, so I have to be as detailed as I can. But once you get the concept, less than 2 minutes, you already know where the market is going. So we're looking at a situation where, since it takes the market to take off the last high, right, for us to categorize the market as being in an uptrend, so the market finally took off the high right here. So now what does it look like we have? This is where we start to bring out the structures. So it seems to us as we have the market giving us lower lows, lower highs, lower lows, lower highs, and lows. And it started to move on what seemed to be a higher low within the smaller structure, but eventually came on to breaking this one, now giving us a retracement back to this level. And that makes this level a very, very strong key level for us, right? We're having a very strong key level right here where the market has been rejecting from a daily time frame. So we are of the look that if the market can reject this level, okay, then that means we might be flying to the upside. But then I wanted to discuss a couple dynamics with us so that we can understand what the market is doing. So when the market breaks this level, usually when the market breaks a very strong level, it retreats. that means it's a rest phase, right? That's what we call the push exhaustion phase in the market, the push, the rest phase, the push, the rest phase. And that's what gives about to, you know, structures and swing, right? So usually the logic behind that is the buyers that came in right at this point, are finally taking the market out at this point. They have to come back right here to find a rest. Usually you measure that using the Fibonacci. So if you bring out your Fibonacci, you're going to realize that these are Fibonacci levels, usually the 61.8 zone. So what we can see right here is that we've confirmed the authenticity of this point being the new higher low. Why? Because the market broke right here at this level. So this is a new higher low. Then we have all of this one, and now we are having all of this one. So apparently, from the daily time frame perspective, the market is going to the upside. So it's very interesting for us to see. Now, the 4 hours time frame is what gives us more details, right? So that means we can be able to bring out the structures even way more, right? And the market works in principle. You know, I was talking about that to my war room students today. The market moves in principles. A lot of people just think this market is all about gamble. Let me speculate in and out. You know what? It may work for you, but I can tell you for a fact that this market moves in specific principles and structure. That means the superior thinking about the market is if the market breaks this level, it's going to this level. If it does this, it's coming to this level. If it does that, it's coming to this level. That is how you should think as a superior person, right? So you want to look at those levels that the market needs to break. You want to see the way the market is going to build up for the next push. And this is the summary of what trading is all about. So right here, we had a situation whereby the market started rejecting, so we can see the structure more clearly on the 4 hours time frame. And we have this one right here, and the market broke this level. So usually when the market broke that level, what are we looking at? We're looking at a retracement structure, right? So we have this retracement structure back to this level. So you can see where the retracement came in, the Fibonacci level right at that point. So now that we confirmed the Fibonacci level, where are all the points we're looking for the market to hit? So naturally, the break of the trend right at this level signified that the market is actually going to this level, which is the reason why I've been targeting the 208. Now, this takes a lot of skill set to do, right? So in as much, I've been waiting for this trade actually since November. The folks in my war room knows this, right? I've been waiting for this trade since November last year, right? Because the market has given us a very clear direction of where it's going. And everything that happened over the past, couple months have only been a retracement. And finally, we have this retracement at this level. Well, need me to say that aside from that being a Fibonacci level, it's also a level of the trend line level, right? So this is the first time the market was rejected. I was explaining the concept to my students, and a lot of people draw the trend line wrongly. To get the most accurate trend line to use in the market, you must be able to use it one hand in hand with structures, right? So this was the low, right? This was the break right here. This was the push that could not reach the 61.8, and this was the move to 61.8. So if we are going to work with the trend line, to us, this would be the touch one. This 61.8 retracement will be the touch two. And this current touch that finally touched about a couple weeks ago is going to be our touch three, right? So that was the reason why we have it. I'm sure a lot of people didn't see this. A lot of people didn't know that there was a trend line connected to that effect. So now that we have the market moving in that way, the next thing we want to do is now start to prepare for a buy trade opportunity, right? Now we've confirmed that this level is moving, right? So what do we have? We have the market moving right here on a low. We have the market moving right here, and it rejected this level for the first time, right? I remember that we took a trade. We took a trade right here, and we closed the trade right to this levels. So right now, what do we have? We have a situation whereby the market moved into different structures. So let's identify the structure: lower lows and lower highs, lower lows and lower highs. Then we start to have lower lows and lower highs, lower lows and lower highs to this level. And the market came right here to test this level. And this is very significant for this level being tested, means that the market is ready to break above that level. So when we got this level being tested, the next thing we want to see is to see if this level can lead to a retracement. And when this retracement level gets broken, we want to get into the market. And it is really that simple. So this retracement level is what we want to see on the 1 hour time frame. So on the 1 hour time frame, what do we have? We had a situation whereby this retracement level came in, and we had this whole consolidation last week. Was a very crazy consolidation, but the market rejected right here and created a new low. So the moment the market broke right here, our entry was very valid. However, the market went up again. When the market pushed, especially coming off a strong level like this, the market has to give us an exhaustion for it to further push. So that was exactly what had happened this week. We had a break. We had a break of that level. Okay. We had a break of that level. And, you know, some got in right here with stop loss right below this level because we're swinging serially. I got in right at that point. The moment the market retraced back down to this level, I loaded in even much more entry opportunity. And I've been talking about this buy, right? And what you can see that the market is doing right now is we had the market moving to this level. But like I said, the market moves in principle. So the market was never going to take this low out. Let me just change this. Like I said, the market moves in principle, okay? And if you have any question for me, you can start preparing your question as I'll be rounding up soon. The market was never going to take this low out. So after the market breaks, right, there has to be a discount, right? For people who have been in my channel, you know, I talk about the discount a lot. The discount usually is where, in this case, the buyers, the bulls broke it, right? The sellers will still exert some pressure so that you can be able to so that the buyers can be able to come in and you can be able to inject more price. So let me teach you what this means in a later. So let's say when the market broke this to this level, notice the close happened right here. Now, at this point, the market is too expensive to get into. Look at it. If you had gotten into the market right here, so let's say we're targeting. Let me explain what these discounts really mean, right? Let's say we're targeting this level. I want you to see the difference. This is like 1:5, right? This is 1:5. I want you guys to understand what the discount level means. Now, this was the point where the market closed above this level and broke, right? So usually, when the market breaks the level, especially when the market is coming off of a very strong rejection right here, and the bulls, the first phase of the bulls right here can only break this level right here. But they give room for the second phase of bulls to come in because they are exhausted. So that's where we get this whole exhaustion, or what you guys technically call retracement, right? So when this happens in the market, the bears take advantage to push it, you know, having their last fight in this, right? But usually what happens is this is the bull giving in way for the second waves of the bulls. So what happens? Instead of you buying this currency at a very expensive price, the market gives you and offers you opportunity to wait for it to get cheaper again. Now, this break means that the currency is about to appreciate, but you want to be able to find the right timing at a cheaper point for you to get into the market. And this is the exhaustion back to the Fibonacci level. Usually you use the Fibonacci level to measure it. Now, look at the difference. Entry right here makes this currency expensive to buy, and the risk reward is really high, okay? But look at something really very interesting. Hold up. Look at something really very interesting. If you had bought right here, the risk reward ratio is 1:5. Doesn't really make any sense, right? I mean, it's a very good one, but look at it. If you had waited for the market to offer you that discount to this level, you literally would make 2 times more. This is 1:16 right at this level, right? So while this week, a lot of traders were in a panic mode, this was simply just an opportunity for the second phase of buyers to get into the market. And I did loaded a new position in when the market got to this level. And if you're in my free channel, you're going to hear me say buy, just keep buying, even when the market was going down, right? And that was what we had here this week. Now, here's where a lot of people are going to take a lot of losses this week. You see, many of you guys don't know how to set your stop loss, right? You just enter into the market randomly and you just, you just get into the market. And a lot of you guys have been wired to, when the market is moving, break even, and, you're not letting your market, breathe. And many of you guys think you are trading the right way, but I can tell you that you are trading out of fear. You might think I've broken even my trade. You are literally just trading out of fear, right? And that fear is what caused you to set your stop loss in an incorrect way. The market hits you out and the market is going to take you out. Now, look at this. This was where a lot of people put their stop. Like when the market broke at this level, a lot of people put their stop loss right below this level. And you can see now, you guys can give it any terms, liquidity sweep, whatnot. It's very simple. Your stop loss was set wrongly. The move that started this, the level that started this move started right here. You should wait for this level to get broken, then at least move your stop loss right below this level. Right? This is still a very good risk reward. I believe the last week, I think we kind of get in for like a 1:9 kind of situation, right? Because we got in right on the 30 minutes time frame, right? But look at this right here. If you had put your stop loss right here, I got thousands of messages, literally, from people and talking about like, oh, I bought, but it took me out. And I asked them a few questions, like, where's your stop loss, right? A lot of people don't know how to set a stop loss, right? And as a rule of thumb, right, for you guys, if you want to set your stop loss going forward, right, and you're trading off of this level, don't ever set your stop loss. Don't ever take a trade and set your stop loss within this price point. Set it below the price point and let your market breathe, right? Focus on quality. Stop chasing money, right? So when the market came up and gave us this, right, this was a very fantastic opportunity for me personally, with my stop loss right below this level, about one resistance, something like that, when the market moved. So a lot of people was taking out. We are getting in on an entry, while a lot of people were getting stopped out. You see the difference? It's just the way we understand it, right? So what really happened? The second phase of panic started when I'm just gonna put this right here. The second phase of panic started when we started to have this the market give us this sell right here from this level right here. People started panicking, even some of very great traders, right? Because a lot of people say, oh, the market is breaking this level right here and it's going back down. No, that was not what the market was doing. The moment the market had taken off this level, and has broken it right above this level, it's further confirms the bullish move. So what the market did was simply just it could not sustain that move, because when you look at this right here, right, this move got weakened right here. So the market needs to retrace back and find even a much more cheaper opportunity, which making the market give us the second or third opportunity for the week. Okay, so we have the market reacting at the previous area of resistance that was broken right here and turning it into a support. So literally what the market did was come back to this previous area of resistance that we got broken and literally turn it back into support. And now that the market is turning back into support, what do you see right here? You see the break of structure right here? So that means that the market is literally going up. So a lot of people was correct with the direction, but a lot of people were not solid with their conviction. And for you to have a very solid conviction, you must actually have a very clear knowledge of what you are doing in the market. So while a lot of people were hitting the stop losses, I was adding in positions in the market, and I was reinforcing my community to hold the trade. Everyone is right in profit and ready to ride. This is going to be a serious swing, right? In case you've not taken a swing like this before, you might want to, join me. And I have hundreds and thousands of people, in the free channel who literally are still holding their trade. A lot of people are still holding their trades, right? So the game plan at the end of the day is for you to have a knowledge of what you're doing, right? I'm still going to be on this buy, and I'm still going to be riding right, and I will be managing the trade as it goes. This is going to be an incredible trade. I tell you, this is a trade that once I close, I've covered 4-5 months milestone, right? And that can only be possible when you are a swing trader. And that can also be possible. It's a different thing to enter a swing trade. It's a different ball game entirely for you to stay in the swing trade, even amidst the up and down movement that the market is giving us. Okay. So this is really what we are doing right now. And this is definitely what we should be expecting next week. For next week, we should be expecting a further push. Like I said, the market has broken this threshold. So I would expect the market to give us a very strong move on Monday and, continue, giving us a move to the upside. That would definitely be my expectation, because now the market is rejecting on this level. So these are the different levels where the market is finding strength. The market's formed strength right here, formed strength sometime this week. Now, by the end of the week, is finding strength right here. Where's the next level the market is going? I believe 100% that the market is going to target the 194 level. So if the market target the 194 level, then we might definitely see some, relapse in the market. I believe 100% that the market is coming right here to target this level. And once the market breaks that level, we are definitely moving to the 198, the 199 zone, or the 198 zone. So this would be, for me, the trajectory of the market, and I'm definitely looking forward to next week and see what the market has to offer us. If there's a very, very big lesson that I need everyone to learn this week, is number one, stop focusing on this news and all of this. It really just disorientates you, right? When you create this fear factor in your mind and you find yourself playing into that trap. Listen, whatever news the market is going to do will keep you in the direction of the trend as far as you're correct and your stop loss is being set the right way. And I've shown you an example of a case study of a trade. I don't take this trade and look at the news. I take this trade because I'm a technical trader. I make use of structures, patterns, and trend and understanding of the flow of the market to make decisions, right? So I look at the market through a technical standpoint, not a fundamental standpoint. Every details of the past news I need is right on the chart. It has been priced on the chart, and I make use of those information to get in, my next opportunity in the market. So I am not a fundamental trader. Maybe many of you guys need clarity, right? Because lack of clarity in even knowing what you do, knowing who you are as a trader. Am I a swing trader? Am I a day trader? Am I a news trader? Am I a technical trader? A lot of you guys have not sat down to ask yourself, what kind of trader am I, right? Perhaps when you actually sit down to analyze the kind of trader you are, you find out that it becomes super easy for you to actually make decisions that are inconsistent with who you are. And this is why I recommend that every trader needs to have more than a strategy. You need a trading system that defines who you are as a trader, define what kind of analysis you do, define what kind of time frame you do. That trading system becomes the bedrock of your mental environment that allows you to do so much with confidence. When you know what you need to do, how you need to do it, when you need to do it, and why you're doing it, you have more confidence. Unfortunately, a lot of traders focus on strategy. Strategy just gives you that execution. What gives you the mental environment for you to execute the right way is having a full system. And I hope this helps. And another lesson is don't ever panic. When you set your trade, you know why you got into the trade, just set and forget it. There's no point panicking. I tweeted something on my Twitter account. And if you've not followed us, it's SWINGTRADEFX, SWINGTRADEFX, right? And I mentioned that as humans, the first response, in fact, not response, reaction to anything that threatens us is to find a way to escape that, right? A lot of people want to escape hardship. A lot of people try to escape emotional pain. That's the first direction that we go. That's the first reaction. And the same thing applies in trading. When you focus on money and you see your $1,000 in profit start to come back to $100, guess what? It triggers that threat, right? And when you're in the state of trade, the first thing is to go out, get out of that emotional distress. And that's the reason why you kind of panic out to, panic out of a trade, right? So what is the solution to that? The solution to panic and impulsive decision you're trading that leads to the detriment of your trading is to have clarity, right? Once you know why you enter a trade and you look at specific levels, that this is how I think about trading. If the market breaks above this level, this is where it's targeting. Why? Because I'm working with principle. The movement of candlestick does not drive me. The movement of candlestick is going to give me false information. I'm bringing the movement of these different candlesticks that has formed into structure to make my decision. And when you get to that point, everything gets clearer. When everyone is panicking, you're seeing opportunities, just like I did this week, right? So this is it. And this applies to all pairs and this applies to all trade. So thank you guys so much. Next week on GJ will definitely be more bullish. I'm holding this all through. I'm definitely holding this, and I'm probably going to keep updating you guys on the free channel. If you are looking for a community to join, I recommend that you join our free channel. For people who are looking for community of traders where they can learn and they can master my skill, you can go to our website, www.swingtradefxacademy.com. And for people who want to trade live with me, my war room is open to people who are taking my course, right? So you can reach out to us. And if you have any inquiries for me, text me directly. And I want to make a warning, right? There's a lot of people that are impersonating us online and actually trying to scam people using our brand. I've seen some this week. I've posted about some this week, and we're making an effort to make sure that we get them arrested, right? Regardless of wherever they are, right? We are going to reach them, right? So please, I would never come to your email or send you an email or come to your DM and text you and prompt you to say, I have this for you. No, number one, I do not accept investments. Number two, I do not give out signals. And number three, I only operate on my website and I only operate live on the war room. So if anyone claims to be me without having to trade live, and again, I think the best thing for you to know if it's me or not is I trade only GJ, and a lot of you guys know my voice already, right? So if anyone come under these guys of my name, please protect your money. Don't be scammed. A lot of scammers are out there. So thank you guys so very much. And if you have any questions, you can text me directly on Telegram. I'm just gonna type it right here. At Yemi STFX. This is my Telegram. Okay, anyone that says they are me and you don't see this handle on their Telegram, please you have to stay away from them. So thank you guys so much, and I'll see you guys next week. God bless you.